Ladies and gentlemen, good afternoon. I realize I am in a demon spot. I stand between you and lunch, in which case I wish to apologize. I realize many of you are looking at me today rather like refugees from a Mila Jovovich zombie film. You're ready to bite the head off anything you can see, but stay with me. You have a competitive advantage by staying in this room at this juncture, and we are going to run through a little petabyte of revolutionary information to make your fintech understanding so much better. So this is a little slide, gives you a little bit of information about me. Essentially, I've been in the fintech business for, well, 20-something years at this juncture, ladies and gentlemen. Also happen to have some investment in Poland. We run a startup club out of Torun in Kujawsko-Pomorskie. It's called Mission to Run. It's essentially our effort to try and, well, essentially rescue the youth of Poland one at a time and get them into entrepreneurship and business rather than leaving them to the ravaging clutches of the NGO culture. I also happen to publish a newsletter every day, which is called Exchange Invest. It's the daily read of the financial market infrastructure industry, covers fintech as well. It's read by everybody in the world who happens to be anybody in exchanges, the minus 0.00001 of the population, if you will. And at the same time, we have a couple of other ventures around. One of my fintech things I did at one stage, I was a co-founder of a thing called InTrade, which was one of the early prediction markets. And I suppose, in many ways, it all goes back to this, ladies and gentlemen. This thing here, you may remember it for the Kindle generation. It's a thing called Book. It was a very interesting interface once upon a time, very useful. You had pages, they delivered information and data. Unlike a Kindle, very difficult in order to reprocess, although they could be recycled. So this book, ladies and gentlemen, came out in 1999. It's called Capital Market Revolution. The word fintech didn't even exist for like another dozen years after it. But this is the book that brought the first vestige of understanding. By that stage, we'd been doing online financial e-commerce for about 5 years. We'd been very actively looking at the future, and believe me, in those days, we could have probably fitted the entire financial world into the green room at the back of this hall. We certainly wouldn't have needed these august surroundings of the Maxberg Institute here in order to manage to speak. So the point, ladies and gentlemen, is I'm going to tell you a few things. I just want to warm you up. Change is the only certainty in life and investment, and frankly, I'm delighted that the organizers, I noticed when I arrived here, had an ambulance outside because some incumbents in financial markets may find this next 10 minutes challenging. This is a quotation that I'm quite famous for. It's on various of the internet quotation databases. Goodness knows why. And essentially it's this. The trouble with weather forecasting is that it's just right too often for us to ignore, yet it's wrong too often for us to rely on it. And that's essentially the sort of predictive skill humans are very, very good at. If you want to look at it another way, we could say, in the land of the blind, the one-eyed man is king. That's essentially where we are in terms of financial technology today. We have a fabulous smugness that we have solved lots of problems, and we are barely scratching the beginning of where we want to go. I want you to succeed. I want you to be successful, but you've got to listen to some of the hard lessons in order to understand really where financial technology is going, as opposed to some of the viewpoints of many incumbents. So early in the 1990s, this was the word we all talked about, disintermediation, the removal of middlemen. Why are people at the moment focusing on something like insurance technology? It's really simple, ladies and gentlemen. There's a big pricing opportunity here of masked, fetid inefficiency. Same in mortgages, same in all sorts of other things. If you look at capital markets, their transaction costs have come down by 95% over the course of the last 40 years, driven predominantly by deregulation and technology. Where are we at the moment? More competition than ever. Tiny, tiny fractional increments of improvements in a micro-payment world. And if you're not doing micropayments, if your business is not capable of doing micropayments, then you will not survive in the future of the financial marketplace. So if you think about it, where are we in terms of the revolution? Well, this is New York, 1915. We're looking here at peak horse. 30 million horses in the United States of America. Today, there are barely 8 or 9 million horses in the United States of America, most of which are used for leisure purposes. Very, very interesting transition driven by the automobile. Similarly, something we've seen ourselves in Poland in the course of the last decade, peak mobile phone shop. Everybody has one of these fantastic gadgets. They're just incredible. They do everything you can possibly imagine. They're Facebook, they're your online bank, they're all sorts of other things. You can use them in order to deal, whether you're using platforms like I think eToro we were speaking this morning, or multiple other things. You can interact with your exchange, you can do your investment, you can do your social media. And the really incredible thing is you can also pick it up and you can ring people on it. It's just amazing. You can dial in a number and it just works like a telephone. Technology, quite incredible altogether. That's the pace at which things move, ladies and gentlemen. So we've reached peak mobile phone shop. We've gone past peak bank branch. In fact, if you look at this, you don't have to look at it in detail. What we have here is the St. Louis Fed. They've given us a very, very lovely thing which shows us one very simple thing. As people adopt technology, they change their use patterns. And what we therefore see is the number of bank branches collapsing and obviously the number of mobile phones going up in a fascinating synchronicity. But there's more, you see, ladies and gentlemen, because this is the message that a lot of people don't want to face up to right now. Banking, a 500-plus year mega cycle. The power of bankers peaked in 2008. 2008 wasn't just a financial crisis. It wasn't just the end of Lehman Brothers. It wasn't just the end of vast amounts of over-the-counter dealing between banks and the financial market. That, ladies and gentlemen, was the 500, 600-year peak of the banking industry. And therefore, the way we need to look at things going forward is we need to address and understand the fact that for the rest of our lifetimes and for the rest of history, banks will be less important. Now, admittedly, that's a 50, 100-year cycle we're talking about. It's going to take a long time to see the banks not being pretty dominant in our lifestyle, but it's happening. Everybody is going after some part of the bank. And when you look at the banking model, it is rancidly inefficient in financial market terms. It's 1,000 basis points between where you deposit your money and where you lend at. That's just completely ridiculous. It's not fathomably going to manage to survive in the long-term future. And therefore, while some banks are working assiduously to make sure they survive in the interim period, we are now beyond the period of the peak of banker power. And everything about our financial marketplace is going to be defined by the ending of the bank supercycle. So that leads me to two large fintech, for want of a better word, canards. Faux pas, mistakes that people make. You recognize this woman on the left, all of those of you who are Polish. If you're British or American, you might know Gordon Ramsay. Kitchen Revolution, Kuchenia Rewolucja, if my Polish stands up for it. What does Magda Gessler have to do with fintech? And this is not a joke. What Magda Gessler does with fintech is this. She presents Kitchen Revolution. She goes in, she runs around a restaurant, she shows the things that are wrong in the restaurant, she cooks exquisitely, she never breaks into a sweat, she shouts and yells, and yet she makes us all think, you know what? Gosh, I could run a restaurant. It's really easy. Look at the way Magda Gessler shows me how to do it. That, ladies and gentlemen, is the problem right now with fintech. The vast majority of projects we're seeing in the fintech world are people who are looking in from the outside who don't have experience necessarily in the nitty-gritty of the workings of financial markets. And that is a huge problem. Therefore, the interesting fintech is quite often being developed not by technologists, but by people who've spent 5, 10, 20 years looking at the inherently incompetent, inept, outmoded, outdated systems of payment, systems of capital markets, and so on. And that's why, when you go away, you have to think about one of the biggest problems being Magda Gessler syndrome, and the second, obviously, being the incumbent power of the banks. They still have the balance sheets, but it won't last long, ladies and gentlemen, because they're in decline. So therefore, we look as follows. This is essentially where we are in the cycle at the moment. A vast amount of financial technological applications are just lipstick on pigs of banks. Some banks are wonderful. mBank is doing great things, for instance. But overall, the banking industry is trying to tart itself up in the way that 18-year-old boys get their first car and they put wheels on it and they put flash wheel arches and wings and all sorts of things to try and make it look better. Very, very important. Because ultimately, what the banks are building at the moment and what bank-centric fintech is building in far too many places is this: dinosaurs with sunglasses. In fact, it's dinosaurs with sunglasses with a B-day. The B-day being there to give them a sense of occasion and a sense of interest. These are the reasons why we need to break this umbilical cord and really see a new finance, the capital market revolution. Because at the moment, far too many people are simply dependent upon the banks for seeing them as the epicenter of financial markets. And when you look at a regulatory system, a political system, a conference system, an organizational system, a financial marketplace, where the first thing they do is talk to the banks, then you are looking at the jurisdictions that will fail in the capital market revolution, ladies and gentlemen, because you need to have an open mind towards new systems in order to succeed. And it's very interesting. Everybody loves to talk about Uber and Airbnb and those sorts of models, and I think they're fascinating because actually, when you look at the regulatory foresight issues we have at the moment, what's going on with Uber? Well, around the world in many countries, fortunately not in Wroclaw, and I applaud the authorities for that because otherwise I wouldn't have got here today, Uber is still legal. In Paris, the taxi drivers are revolting in several senses of the word. The point about that, ladies and gentlemen, is regulations are now being fitted to keep the taxi drivers happy. The problem is, the technological warfare is not about Uber versus men driving taxis, and they are predominantly men. The issue that we're looking at here is that driverless cars are going to dominate our world in the course of the near future, within a decade or more. That kills the taxi driver, that kills the taxi driver model, and what are we seeing? The regulators in some places are regulating as if the argument is Uber versus taxi drivers. And that's a problem because, as I discussed with the head of ESMA, Stefan Mayor, in Stuttgart a couple of weeks ago, the difficulty we see here is that if you're not regulating to be several steps ahead, it's going to give you a huge jurisdictional disadvantage, as in fact the gentleman from Baker and McKenzie were saying just before me. So what do we also see that's very, very interesting, ladies and gentlemen? Because in a world where banks believe that they are the epicenter of finance, the truth is the epicenter of e-commerce is in the exchange model. And this is very important. Look at these guys here. You have Airbnb. What is that? Essentially, it's a centralized exchange where people bring together apartments in Wrocław and Warsaw and New York and so on, and they rent them to others. Allegro, eBay, Uber, they're all the same as essentially markets for bonds, derivatives, commodities, and stocks. The exchange as the epicenter of the future financial marketplace is as essential a tenet to take away as the notion that the bank ultimately has peaked, that in the 500-year mega cycle, we are seeing the death of the banking system. So therefore, ladies and gentlemen, it gives me a minute and a half to talk about one of those things that is, of course, the elephant in the room. This man here, Luca Pacioli, he invented double-entry bookkeeping. Actually, he wrote double-entry bookkeeping into a textbook. The first time it was done, possibly the Koreans invented it 1,000 years ago. The point is, what does the distributed ledger do for us? What is Bitcoin doing for us? And the thing is, well, as someone who has an investment in Torun, I think it's appropriate. I call it the Copernican revolution in finance. Because this is legacy finance, ladies and gentlemen. We've got Professor Belka. He sits as the head of the National Bank of Poland. Actually, a central bank, which I think is doing better than many, quite clearly. And that's the Copernican, pre-Copernican universe. This is a view of a post-Copernican universe in the Copernican revolution. Is Bitcoin the epicenter? I'm not so sure it is. But the point about what it is that Bitcoin was the infrastructure that first managed to make the whole market system work. Bitcoin is the first time we've seen the infrastructure being built out in the same way as what the Model T Ford did was fuel roadside truck stops, service areas, garages, and so on. So, ladies and gentlemen, what I want you to take away today is 3 simple revolutionary messages. The banks are in decline permanently. It will take a long time, but it's going to happen. Don't fall foul of the Magda Gessler syndrome of looking from the outside in and thinking that necessarily you will invent the great future device. Equally, worry about the fact, ladies and gentlemen, that in this world where people are busy building dinosaurs with B-days, who've got sunglasses, which means they can see the meteorites much more easily, you have a problem. Because there is one simple message to come from my speech today, ladies and gentlemen. It's not a huggy-kissy message. It might give you some degree of heart failure. The ambulance is just outside. It may give you indigestion. I'm sorry, but you're going to be able to eat in 20 seconds' time. The message, ladies and gentlemen, is the capital market revolution lives 20 years on, but your job is quite simply don't be collateral damage, because whether it's the nation state, whether it's the bank, whether it's the finance industry, or whether it's the future of whatever fintechs you can do, ladies and gentlemen, this is victory or death. My name is Patric Young. Thank you very much.